Ladies and gentlemen, welcome back to the FinTech Recap this week. So, as of this week, we are going to be talking about the companies that have made the largest moves this week, the macro that we have to keep up with, and what's coming next. So, first off, being probably the largest news this week, Anthony Noto has announced that SoFi at Work has an amazingly large new partnership with Paychex, which is actually another public fintech, ticker symbol PayX, okay? PAYX. They're about a $60 billion company, and they are what's called a human capital management company. It's HR, it's payroll. They handle a lot of business. Now, all of those business that works with Paychex can now offer their businesses to their employees personal loans, student loans, emergency savings, all of these different tools. We'll go through that in a second. But Paychex, just to put it into perspective, they pay 1 in 11 US private sector workers their wages, and that is a very, very large amount of business. Roughly 136 million private sector workers in the United States. If Paychex is paying 1 in 11 of those, about 9.1%, or roughly 12.36 million users. Okay. This is absolutely huge. That's larger than the entire base of what SoFi has on their platform, which can now be sold or cross-sold over to SoFi's products through student loans, personal loans, savings accounts, investment accounts, all of these different things. It's essentially SoFi members being crossed over from another top of funnel source. So not only do they have to go through TV commercials or finding them on the App Store or paying creators to promote them, what they can also do is end up having employers offer their employees these brand new benefits packages, which is absolutely amazing. The upside is simple. I mean, this lowers customer acquisition cost if you don't have to pay for paid marketing to get more people onto the app, and it raises more brand awareness. The more essentially top of funnel ways that people can go and find SoFi's products, whether that's SoFi Center through TGL, online commercials, SoFi Stadium, the App Store, this new Paychex, partnership, all of it adds to SoFi's bottom line. So this is a very exciting partnership. SoFi across every metric is essentially growing, but if we can accelerate those growth rates, that could put a higher multiple on the stock. But that's not the only exciting news for SoFi stock. We also saw another SoFi job posting for a crypto platform, okay, which involves custody and wallets, key storage solutions, transaction processing pipelines and blockchain integrations, and developing APIs and tools for internal product teams. Absolutely amazing. Now, they said lead complex build versus buy evaluations. So they're trying to assess whether they want to build their own platform versus trying to acquire a cheap company that might be industry leading that could add to the effects of what SoFi is trying to do or what Galileo is trying to do, which is offer SoFi products, but also offer them to other, institutions as well. So this is a very exciting job posting. We also saw another post from SoFi Insider on X where he said that level 1 options has started to appear in the latest app code. You can see this here, option selling screen widget level 1 with covered calls and cash secured puts in there as well. All indications that we're going to see level 1 options here very soon. In terms of news from other fintechs, we got to see Block, ticker symbol XYZ, join the S&P 500. I was pretty loud and clear this week that I thought that this was a big misstep from the S&P and that I would have preferred something like Robinhood to get in this early. At this point, I actually think that SoFi might actually get in before Robinhood because clearly they are avoiding them for some sort of reason. Some people say valuation, some people say volatility. Who knows? Anyway, PayPal USD also just got multi-chain access onto Arbitrum, which, how big is this deal? Not super big, but it is news. I wanted to put it in just as one single slide. Coinbase actually updated their entire Coinbase wallet app, now called Base. They're adding in a social network layer. They're adding in Base Pay, which I think is going to be the biggest part, international payments, APYs on those accounts of 4.1%. Both are leading. Both are the cheapest that you could possibly see. If there's any way that, USDC and the rest of the crypto world comes top of mind for everyone, Coinbase is going to have to lead that. Robinhood's going to have to lead that. And this is a great new ad from Coinbase. So very excited to see that. In terms of macro changes, what we ended up seeing was the Genius Act actually getting signed into law. President Trump sat down, finished everything. So now that is put behind us. Crypto moves forward in a very, very clear way. Now, the only thing, speaking of clear, the last thing that we're going to see, which might happen in September or October, is passing the Clarity Act. Okay. This is going to be the next step for more of the infrastructure side of things. So hopefully Coinbase is right that we see another ad here by passing Clarity. JP Morgan just recently told fintechs that they have to pay up for consumer data access, which is good for JP Morgan. I mean, they are such a leader in this space that they don't need to be nice to the smaller players like the fintech players. However, it pays to be a bank. We have to separate the idea that all fintechs are the same. SoFi is a bank. They're not paying JP Morgan for any of these types of data privileges. However, the fees may vary depending on the company's use of the information, with high levies tied to payment-focused companies, and in some cases, the proposed fees could elapse the revenue certain companies generate on a single transaction by as much as 1,000%. So JP Morgan wants to charge 10x what those companies were charging to their users. Insane. Now, payment platforms like PayPal's Venmo, cryptocurrency wallets such as Coinbase Global, and retail trading brokerages such as Robinhood Markets all use this data so customers can send, receive, and trade money. Typically, they have been able to get this information for free, but soon that likely won't be the case, which probably means you'll have to pay, meaning the consumer, meaning that these fintechs are going to pass along those costs to the end user. That might be the case. However, this is where it's so important that SoFi is in the position that they're at. And in fact, if they could potentially be the data aggregator that offers some of those tools, the way that JP Morgan is doing this for a lot of the fintechs, that could also strengthen SoFi's place in the world of banking and relationships through Galileo and selling data and not just APIs to connect in payment processing space. So very excited about that in terms of SoFi's position here. Trump's set to open $14 trillion US retirement market to crypto investments. Now, it's not actually just crypto investments. It's mainly all alternative investments. So this is real estate. There's a bunch of different things being added. However, the exciting part is that 401ks will be able to invest in alternative assets away from just traditional stocks and bonds, which could be very exciting for crypto markets. And lastly, for real macro changes, Christopher Waller, who's actually one of the Fed directors that is and has spoken publicly about this, wanting to become the chairman of the Fed, has just put out a large article talking about the case for cutting rates in July. Okay. July 30th is when we are going to see a potential rate cut. Right now, there's only a 4% chance of cutting that rate, but that's also increased by roughly 4%. It was pretty much at 0.1% about a week before he actually wrote that letter. So the fact that it is climbing is showing that there could be some potential for this, but really the rate that it is changing is for the September rate. So potentially that is going to convince more of the Fed directors that there is a due case for an earlier rate cut, but maybe it's not as early as something like October or December. Now, if it does happen on July, it's July 30th. Keep an eye out for that. Lastly, I just want to say that the week closed out at a fear and greed index of 75, placing us right on the edge of extreme greed. Now, am I still fully invested? Yes. I think that the tailwinds that we're seeing right now are stronger than ever before. Deregulation, cryptocurrency coming at full mass. This is redefining the payment rails, artificial intelligence, robotics. Everything is coming out that is very, very exciting for the future and could be great for economies. However, the speed in which markets are recognizing this is pointing to some level of fear and getting markets maybe a little bit excited faster than how fast earnings are actually growing. Keep an eye out for that. Now, upcoming week, next week in fintech, there's not so much. Now, I did want to highlight that still next week is an exciting earnings week. In fact, on Wednesday, we have Tesla, Google, ServiceNow, Chipotle, IBM. It's really going to be the big name next week. But if you're interested in Coca-Cola or Lockheed Martin, maybe Texas Instruments, then there's other days here that could also be exciting. But for me, it's all about Wednesday, maybe a little bit of Thursday for Intel. But until then, guys, thank you all so much for watching. Really do appreciate your time. Bye for now.